do it.
Okay, let's go. So
Fun.
thank you, Mahsa and Didem, for your presentations. Very interesting, especially your classification system. It's the first time I see all the tokens properly classified. Unfortunately, I'm using some sort of classification in my presentation as well, but it's not as good as yours, so bear with me. But I'll try to refer to your work from now on. So welcome. Thank you. My name is Marc-Andre Dumas. I'm happy to meet you all for this introduction to MakerDAO. Before we begin, I'd like you, if you have your phone or if you could open a tab on a second monitor, there's a URL here, polev.com/mdumas052. So if you could open this link, we'll use this tool to have some sort of live interaction. So hopefully it will work well. So while you're opening this link, I'll introduce myself. My name is Marc-Andre Dumas. I work for the Maker Foundation in the integration engineering team. That's a team where we are working with other crypto projects, exchanges, fintechs, and other companies to integrate DAI and the Maker protocol into their products. I'm based in Montreal. I'm relatively familiar with these meetups, Ethereum, blockchain, and decentralized web Montreal. I used to participate to these meetings from time to time, but I was usually sitting in the back, and you probably never noticed me. I've been part of the MakerDAO community for a while, and I had the opportunity to join the foundation a year ago. So let's begin. So let me start with a little question. So just to understand what's the use of stable coins and why we're actually talking about stable coins today. So I would like you to ask a first question. So if you want to buy pizza, what do you want to use to pay for your pizza? Are you going to use Bitcoin, Bitcoin Cash, Ether, Litecoin, or a stable coin? So I see there's few answers already, so it looks like it's pretty much anonymous. Everyone wants to use stablecoin. There's maybe 1% that wants to use Bitcoin. Other, okay, that's good. Okay, so let's jump to the next one. Bitcoin Cash, good. Let's jump to the next one. So now, instead of buying a pizza for your immediate consumption, so which cryptocurrency would you rather hold for your retirement? So we're talking about a long time frame, and 10, 20, 30 years ago, later. Yeah, so which one do we want to use for maybe a long-term return? So looks like a tie between Bitcoin and Ether, and not surprisingly, stable coins are not scoring that well here, but there's still 9% of the participants that are that would use that. So that's okay, mostly Bitcoin. So we have a few Bitcoin maximalists over here. Good. Next question. So in which cryptocurrency would you rather get paid? So your boss is offering you the option to get paid in a certain cryptocurrency. Which one do you pick? Yeah, I'm seeing almost a tie between Bitcoin and a stable coin, but yeah, so it's, I guess, so it gets a bit more split between the options. And last question, which cryptocurrency would you use to save for your summer vacation? So in July, we're allowed to rent a cottage and go outside of Montreal. So you want to make sure you'll have a nice time. In which cryptocurrency are you going to save your vacation budget? Yeah, stable coins is getting there. So the point I'm trying to make here is that stable coin has a lot of use for anything that is short-term use, while maybe other cryptocurrencies could be interested in, and could be interesting more in long term. I forgot, I have a last question. So kind of to mix everything. So you're signing a lease on the new apartment. So the landlord gives you the option. So I don't want to get paid in dollars. I want to be paid in cryptocurrency. Which one do you pick? And that's a 12-month lease. So 12 months from now, which currency are we going to use? Okay, again, the stable coin. So it looks like people are expecting the other cryptocurrencies to take values over the next few months. So that's basically where I'm going there. There's a use for stable coins for anything that is a long-term engagement, or if you want to be safe for a very short term or a long-term engagement, it kind of makes sense to have a stable coin. Cryptocurrencies can be used. They have a use. They have their utility, especially there for gas and everything. You can think it will increase in value, but you won't necessarily risk your lease or your short-term needs. And also, you might not want to be a Laszlo 10 years from now and paying 0.001 Bitcoin for a pizza, and suddenly it will be worth millions, and you don't want to have to tell that to your grandchildren. So what is MakerDAO? MakerDAO is a decentralized organization. So DAO, decentralized autonomous organization dedicated to bringing financial stability and transparency to the world economy. MakerDAO enables the generation of DAI, the world's first unbiased currency and leading decentralized stablecoin. DAI eliminates volatility through an autonomous system of smart contracts called the Maker Protocol, as well as through decentralized community governance. So a key point here, and it's kind of big words, but when we say the world's first unbiased currency, it means that it's stable. It's a stable coin, obviously, but it's most importantly, it is decentralized, and it does not and it cannot discriminate. So any business or individual can realize the advantages of digital money, and I'll expand a little bit over that. But that's really what differentiates DAI from the other stable coin, that it cannot discriminate. So here's my little classification between some stable coins. Is not as comprehensive as Didem and Mahsa's classification, but I want to point out a few key characteristics that differentiates DAI from the other stable coins. So first broad category, I would say that's the equivalent of cash and stable coins. So they're backed directly or indirectly, I don't remember exact classification, but I'm thinking about that, or USDC to USD Paxos. So there's a central issuer, there's a company somewhere that has money or cash equivalents, or maybe some investments in the case of Tether that's not too clear. And that's basically, they're the one that decide when to mint new coins and when to burn them, remove them from circulation. And I think it's, did I mention that there's regular audits to make sure that the money is actually sitting in the bank account. In the case of DAI, instead of being backed by cash or equivalent somewhere, it's backed by digital assets, and I'll expand a little bit about that as well. And what backs DAI is not owned by a company or not an organization. It is owned by the actual users of the protocol. And who mints and burns stable coins? We decide that we need more DAI in circulation. It's up to the user. So the users, any user can come to Maker Protocol and decide to mint new DAI or burn DAI if they can. And stability comes from the backing by digital assets, but also the community votes on risk parameter and market rates. And one also key differentiator from something like Tether or USDC is that everything is on-chain. So we don't even need to have quarterly audits. It's on-chain, anyone can, using some scripts and an Ethereum node, they can verify that by themselves that the digital assets are really where they're supposed to be. And the last category, that's more, I call them the algorithmic stable coins, where I think, like Mahsa explained, when the value goes under a certain $1 or over, there are different rules to create or remove stablecoin from the circulation. And if I may put a comment here, that's kind of the holy grail, that if we could figure out a way to do that without having any collateral somewhere, it would be fantastic. But unfortunately, I don't think anyone really found the solution. And it's an important category because every few months there's a new project that pops up and claims that they found a solution. And I don't think we're there yet. So best solution, in my opinion, of course, it's a DAI stablecoin. It's backed by digital assets. It runs primarily on the Ethereum blockchain, and major differentiator from other stable coins, it can be used by anyone and it can be created by anyone. It's asset backed. So just to explain a bit how someone would come to create a new DAI. Basically, first step, using the Maker protocol, you lock collateral, you lock digital assets into what we call a vault, which is basically a smart contract. And once the collateral is present inside the smart contract, the vault, you're allowed to generate a certain amount of DAI. And once the DAI is created, is generated, it's yours. You can do anything with it. You can use it. You can buy pizza if you want. You can sell it. You can buy more digital assets. You can give it. It doesn't matter. But what's important to remember is that if you want to get back your collateral one day, it means that you'll have to reacquire the DAI that you sold or that you gave, and you'll have to put it back in the vault, where when that will happen, the DAI will be destroyed, and you'll be able to gain back access to your collateral. So this way we're able to guarantee that for every DAI in circulation, there's collateral backing it, and we're making sure there's always an excess. The protocol makes sure there's always an excess of collateral available for every DAI. So and one key mechanism to make sure there's always an excess of collateral is the liquidation mechanism. So if for some reason the digital asset that is in the vault drops in value, happens a lot in cryptocurrencies, there's a lot of volatility. So if it drops under a certain threshold, so right now in the Maker protocol, it is 150% of the generated DAI. So it means that if you generate 100 DAI, you have to make sure there's at least $150 worth of digital asset inside your vault. If it's not the case, the protocol will liquidate your vault, which means that first step, there's a penalty that is applied. Right now is 13%. And the protocol will remove the collateral from your vault and it will put it on auction. And the auction will try to obtain the best price as possible for your collateral in order to cancel your debt. So if you owed 100 DAI, and then with the penalty fees it becomes 113 DAI, then so then the protocol will try to sell your collateral up to this price, and if any collateral remains at the end, it is returned to the vault and you can get it back. So yeah, but when that happens, your debt is canceled. So if you still had the DAI sitting in your account, well, you can still use it. It doesn't really matter. I'm sorry, is there any activity on the chat? I didn't, I saw something.
Yes, there is just one question that just was kind of popped up. Can you use part of your collateral to repay the DAI borrowed? If not, can you repay DAI in an equal value of another crypto, or it has to be repaid in DAI?
Yeah, so the protocol will only accept DAI, but you can still, if you have an excess collateral in your vault, you can still remove this collateral from the vault and sell it elsewhere on Uniswap or any on-chain or exchange or centralized exchange, sell it for DAI, and then sell back your collateral. There are third-party tools that will do that for you automatically, like things like DeFi Saver and InstaDApp. I think they will automate the process, but the protocol itself doesn't allow it, but it's relatively simple to do these steps manually. Yeah, so I keep saying it's asset-backed by digital assets. Up until a couple months ago, the only digital asset that DAI was accepting was Ether. We had running since the end of 2017 until last month. We had a first version of DAI that worked exclusively with Ether as collateral. But at the end of last year, we introduced the new version of DAI, multi-collateral DAI, that accepts is able to accept any digital asset. And right now, there are 4 different types of digital assets that are accepted. Of course, Ether. There's BAT, Basic Attention Token. There's USDC, so you can use a stable coin to back another stable coin. And most recently, we accept, the protocol accepts WBTC, which is a representation of Bitcoin on the Ethereum blockchain. So right now, these are the 4 types of collateral that are accepted, and but there will be more to come. There's actually right now, there's a vote to add at least another one, and over the next few weeks or months, you can expect there will be more. There is a strong, the community really wants to be adding some additional collateral. So just a note about this graph here. It comes from a site called daistats.com. When I say that everything is transparent, it's on the blockchain, that's a site that reads the latest data from the blockchain on the Ethereum blockchain. So on the latest block, we see the total amount of DAI in circulation, so a bit over 120 million DAI, and we see exactly it's backed by what. So it's 87% backed by Ether and 8% backed by WBTC. And all the parameters are available on chain. Of course, you don't have to trust a random site. You can write your own script on your own Ethereum node and be able to extract the same data. So another key point is that anyone can create DAI. All you need is some collateral, either BAT, USDC, WTC, and you can go on a website, create it yourself. And DAI can be used by anyone. Anyone can use DAI, and anyone can build a product on top of DAI, vault on the Maker protocol or the vaults. That's quite important, because if you look at other stable coins, you'll see that they are permissioned. And if you look at on Etherscan or anywhere, you'll see the source code for these tokens. You'll see there are different functions there that are designed to seize money from different random addresses if necessary. So on Tether USDT, there is a function that is literally called destroy black funds, and you give an address and the funds of this address are destroyed or they're removed. Of course, only the owner of the Tether stablecoin is able to call this, but apparently they've done it a few times already. I don't know the reasons, but if you look at the blockchain, you see that at the logs on the Ethereum blockchain, you can see that it happened. USDC, another major stable coin, has a modifier on the transfer function of ERC20, where it will look for blacklisted addresses. And if your address is on a blacklist, there's no way to move the funds out of your address. So that's something that is important to know, especially if you're going to build a a decentralized product or non-chain or a business on top of a stable coin, well, you have to make sure there's no way the coin issuer could basically put you out of business. And maybe if I can draw a parallel with things that happened on social networks several years ago. I remember on Facebook, at some point, there was a bunch of applications running on Facebook, and there were businesses that propped up, and there were games and a lot of things on Facebook. But at some point, people noticed that Facebook was able to change the rules for the applications, and all the applications had to be removed from the platform. So a lot of companies went out of business because of that. So when you build a business on top of someone else's architecture, you have to make sure that the incentives are well aligned and there's no way for them to pull the rug under you at some point. With DAI, it's not possible. These type of auctions don't exist. There's no blacklist, whitelist, or any sort of censorship possible on the DAI contract. So what DAI can be used for. So if you can go back to your app or your website, you have just a very quick survey there. So what are the top applications for a stable coin? So if I can give you a few ideas, there's things like paying a pizza, things like settling a contract. Might not. So in the interest of time, I'll just skip that and go directly to the next one. And basically just to go over the main use cases for something like DAI. So remittance, if you want to send money to another country, DAI can be used easily. You can build a DeFi project using DAI. There's several projects that are using DAI. Even an appearance or in the back, you look at the contract, they're using DAI for the value. The whole DeFi space and open finance uses a DAI excessively. Of course, there are payments. When we think about Bitcoin and blockchain, we'll have in mind these point of sales terminals and the old days where you could pay for a coffee using a crypto asset. So that's the type of thing that we think DAI could be used for. And we also seen some examples that are pilot projects where DAI was used in refugee camps as a way to distribute aid to the people in these camps. And the reasoning behind using blockchain and something like DAI to run it is for transparency. Using the blockchain, these organizations are able to prove to their donors that the money actually goes to the people that need it, and it's really in the interest of transparency. So there's a question there in the chat. So what are the main reasons why merchants would want to start accepting stable coins? Well, if you think about a merchant in Montreal, it might not always make sense because there's Interac and credit cards are readily available. But as someone already answered in the chat, the fees can be relatively large, and we all know small businesses insist on being paid off cash or just Interac to save on fees. So that's the promise of cryptocurrencies. Bypass the system so it can use lower fees and they don't have to use the banking system. But of course, because of volatility, that becomes problematic. But if you go in other countries where the currency is plagued with big inflation, and it can make sense for them to use something else than the local currency and get paid in something else and keep it, and if they think that it will hold a better value than their own local currency. So just give you a few examples of projects that are I find interesting that are using DAI. The first one is quite interesting. It's called Pool Together. It's a no loss lottery. So it's a lottery where you cannot lose. So that sounds like a Ponzi or a scam or anything, but it kind of makes sense. It's a good example of how a blockchain can enable use cases that are not intuitively possible. So basically the concept is that every participant deposits DAI in a smart contract. And at some point, the contract locks and it takes the DAI that the participant deposited and it lends the DAI to another DeFi protocol at a certain interest rate. And during this period of, let's say, 7 days, the smart contract will collect fees and interest on the amount that the participant deposited. And at the end of the 7-day period, the amount of interest that were gained is drawn across all the participants, and someone will gain the interest of all the groups. So right now, interest rates are relatively low, but it could easily represent several hundred DAI. Because if you can imagine, if there are hundreds of thousands of DAI deposited in a contract at the end of the week, it becomes a sizable sum. And after, when the lottery is over, everyone is able to draw the fund that they've put initially. So it's not perfectly a low loss, because there's a loss of opportunity. You could have deposit your DAI somewhere else and gain 25 cents somewhere else, or you can bet your potential 25 cents of gain somewhere. Another use case is DAI as a store of value. So I briefly mentioned something about different countries and regions that suffer of high inflation rate. We're seeing a lot of traction for DAI views in certain countries, especially in Argentina, because there's a lot of crypto that tries to make their way in these countries, and traditionally Bitcoin has been very attractive in Argentina or Venezuela and other countries. But when you think about the volatility of cryptocurrencies, it doesn't really make sense for day-to-day store of value. So let's say you're getting paid on Thursday, you're buying some Bitcoin because you want to spend your money the week after on some goods somewhere. Well, you have no idea where the Bitcoin price will be a week from now. It could be higher, could be much lower, much higher. You have no idea. So a stable coin kind of makes sense there. And why stable coin and not simply US dollars? Well, in many, it happens that in these countries, there's capital control, especially on the US dollars. So it's hard to acquire. You have to go on the black market. And because on the official market, there are daily limits or special taxes or high fees. And we've seen a lot of trading volume of DAI, either as a peer-to-peer or on different fiat on-ramps in Argentina. So that's quite interesting. And what we see, how it's been used, it's basically used as a saving tool. So they're getting paid in local currency. They'll go on a website, a local exchange, to buy DAI for a couple of weeks, couple of months. And when they need to spend it on something, they go back to the same exchange to sell it back for the local currency. And then they start so they can pay what they want. Ideally, we would like the merchants to accept DAI, but of course that's a long shot. It will take a while before we get there. Yeah. So another use case. So it's permissionless. You don't have, nobody has to has the permissions of a MakerDAO or the protocol to use it. So you can actually use DAI to create another cryptocurrency if you want. So an example is Chai. That's a version of DAI that earns interest. Can be interesting. Or you can use it to back the value of another type of cryptocurrency altogether. So here there's an example of an Aztec project that is using zero knowledge proofs and to create confidential transactions. And they're using DAI to back the value of their cryptocurrency. I'm not able to judge if the cryptography or makes sense there on this project, but it's quite interesting that they can simply use DAI. So the value, the store value part of launching a cryptocurrency is already handled by DAI. They can focus on other aspects of other characteristics of their cryptocurrency. So why are these projects are choosing DAI? Well, it's permissionless. You don't need to ask permission to any central entity. You just use it. It's out there. There's also some decent liquidity for DAI. It's available. You can trade it on-chain or on on-chain exchanges or centralized exchanges. There's pretty good liquidity. And last characteristic I wanted to talk about is the composability. By building on DAI, you're joining a vibrant ecosystem, and you can combine multiple projects together, because DAI is being used by pretty much every DeFi space out there. So for instance, there's this thing called arbitrage. So arbitraging is basically if you see there's a cryptocurrency that has a higher value on an exchange somewhere than another one, it kind of makes sense to buy it for cheaper and sell it elsewhere for a profit. So using DAI, you could, let's say, using 100 DAI, buy half Ether on Uniswap, transfer the other to another exchange, let's say Oasis Trade, and sell it back for more than you had before. But what's really interesting is that thanks to the Ethereum blockchain, you can do all of this in a single atomic transaction. So because DAI is used by all these projects, and because on Ethereum everything is open, you can craft one single transaction that will do the whole thing. So if for some reason the last transaction here fails, I'm not able to sell my Ether for 110 DAI, well, the complete transaction will be canceled, and you'll, including the part when you bought the Ether initially. So that's a very interesting way to do arbitrage, and people have been expanding on that even more, because they created a concept called flash loans, and I won't talk too much about it, but that's quite exciting, because thanks to Ethereum's atomic transaction, you can program something where you'll be borrowing 100 DAI, perform your arbitrage, and sell it back. And if for any reason the whole thing fails, it cancels. But also what's interesting here is that you're able to borrow your DAI without any collateral. This protocol here, Aave, and the YDX does the same. It will just lend you any amount of DAI that you want, as long as you return it by the end of the same transaction. It's riskless for them, because if you don't return it at the end of the transaction, they will just cancel the whole thing, and they'll get it back. So I said I'm part of the integration team at the Maker Foundation. So we're doing a lot of work to get more projects to integrate DAI. So we have libraries, for example, DAI.js library for basically web apps. That's a piece of code here that's, just to give you an example, just a few lines of code. You're able to create a vault, deposit collateral, and generate, I think here it's, so yeah, just one DAI, but you get the idea. Just a few lines of code you can integrate with the Maker protocol. We have the equivalent in Python. Of course, smart contracts, that's the whole point. You can integrate Maker protocol inside your smart contracts. Yeah. So I'm just looking at the chat.
Yeah, we had actually a question from Cameron.
Yep.
What do you think it takes to get merchants to accept DAI? I don't think they will accept it until they can pay their bills with it. Whose job is it to make the push?
Yeah.
Gabriel answer actually a pretty good answer, but I'll let you, Marc-Andre, just answer it.
Yeah, of course. Yes, if you cannot pay your bills using DAI, that there's little justification to get paid, unless you're able to easily convert to your local currency. I think Gabriel's answer goes in that direction. So if there are off-ramp gateways that are available at low fees, you can easily sell your DAI for a local currency. But yeah, it's a network of effect, like Gabriel mentioned. that's why we're pushing hard to get more and more people to use it. But of course, getting in the real world, in the meat space, that's very difficult. People use their local currencies. So for now, we're seeing traction mostly for short-term savings, short-term or longer-term savings, some remittance. Also, some people are getting paid. I have colleagues in Argentina that are paid in DAI. They prefer to get paid in DAI. Of course, they immediately sell back a portion of it to pay for their rent and their food. Yeah, that's an option there. I think that's a pretty interesting option for any project or any companies that hires remotely internationally. You don't have to worry about bank transfer and things like that. Just a small different, I think we're a bit over the time. I'd like to conclude by talking.
It's all right, Marc-Andre. It's okay. Awesome. You can continue a little bit.
Okay.
No worries.
Thank you. I'd like to talk a bit about the Maker governance and also because I use different terms, Maker DAO, Maker Foundation, Maker Community. I just want to explain the difference between these three. There's with this little chart, Maker DAO includes two things. There's a Maker protocol, basically the set of smart contracts on the Ethereum blockchain. And there's the Maker community, the Maker community that uses the Maker protocol, DAI, and also governs it. The Maker Foundation is an organization that wants to that's trying to bootstrap the Maker protocol and is part of the Maker community. And Maker Foundation is works at bootstrapping MakerDAO. It developed initial smart contracts. It tries to make partnerships with different projects to push the usage of DAI and basically just fuels the growth of the DAI stablecoin. But right now, the Maker Foundation is one of the big items of work for the Maker Foundation is to prepare complete decentralization, because it's the intention of the foundation to dissolve itself within a few years. So right now we have a roadmap where we're trying to send pass all of our functions to the community, and I think we're getting there, because every month there are new things that the community takes in charge, and eventually we'll simply see that there's no point for keeping Maker Foundation. It will eventually dissolve itself. So Rex has this question about Sai. Sai is the first version of DAI launched in 2017. And it was always known that back then we called it DAI, but we renamed it Sai at some point to ease some confusion. Sai was going to be replaced by multi-collateral DAI at some point. That happened in November. The Maker community decided to keep Sai for a little while, a few months, to ease the transition. But in May, the Sai stablecoin was globally settled. So it means that on May 12th, all the CDP, the vaults for the Sai were closed, were settled. And since then, Sai value is now floating according to the Ether price. So if you still have some Sai, it's now redeemable for the collateral of the vaults. So one Sai is equivalent to 0.005 Ether or something. So right now, Sai is actually worth more than $1 because the Ether price increased since the Sai shut down. And I also want to stress out that community members is very wide. So of course, there are the DAI users, are either individuals that are holding DAI in their wallets, but there are also companies and projects that are building on top of the Maker protocol and DAI. Of course, major player in the community are the vault owners, the ones that are actually creating DAI. They're, of course, very important. auction keepers that are one that will liquidate the vaults that are under collateralized and buy their collateral. Of course, the MKR holder, I didn't talk about MKR, but MKR is the voting token in the Maker protocol. So anytime there's a change to be made to the protocol, the MKR holders have to vote, and the votes are proportional to the number of MKR that you have. There's a Maker Foundation, already talked about it. There's also risk teams. There are people that are looking at the DAI value. They're trying to read the markets and try to understand where the DAI value goes, and they are recommending actions for the Maker governance. And there's also a growing number of independent researchers and independent developers that are building tools that are compatible with the Maker protocol. And the Maker protocol, just to give you the importance of voting and participation in Maker governance, because the Maker protocol has many levers at its disposition. So the Maker community can decide to change the stability fees on the vaults. That's something they've been doing weekly now, either up or down for to try to either increase the amount of DAI in circulation, or contrary, try to reduce it. They also decide which collateral is to be supported. Last vote was to add WBTC, and I believe tomorrow there will be a new vote to add TUSD as a new type of collateral. They also elect the Oracle price feeds, and they set other key parameters like the debt ceiling. There's actually a maximum number of DAI that we can have in circulation. So Maker protocol, the Maker community regularly decide to raise or lower the ceiling as necessary. And they also decide on things like the minimum collateralization for vault, currently 150% for most vault types, but that's not universal. And also the penalty fees on liquidations. And what I really want to, the message I want to send here is that kind of have your say. A lot of people have their opinion about DAI, the Maker protocol, what type of collateral we should use, something we should have only Ether, something we should not have, this or that. They should raise the fees, lower them. There's a lot of opinions out there, but I think if you have an opinion, if you want to learn how it works, join the community, and there's a site called forums.makerdao.com where the proposals are made and debated. You can go also on chat.makerdao.com, where if you want to chat with the developers and other community members to discuss the next steps for the protocol. There are calls on Tuesdays and Thursday to call, either Tuesday's general community call, Thursday there's a governance and risk call, where if you listen to the call, they're basically reading charts about what's the price of DAI, what action should we be taking. And every Friday there's a big executive vote on vote.makerdao.com where people ratify basically the decisions or the proposal that the community made. And something important here is that even if you don't have MKR and you are not able to vote, your voice is still important. And actually, it's possible to influence Maker governance without having a lot of MKR on their wallet. So as long as you make a good argument and you back it with data, and you can be persuasive in a forum, you can push some proposals that you think are best. You don't necessarily have to. Of course, it's up to the MKR voters to decide if it's the right proposition or not. But you can have a lot of influence just by showing up. So question, where can we access the information of participate in community governance call? On forums.makerdao.com every week, the agenda for the call is pushed there, and there's a Zoom link you can use. And also the recordings for all the previous calls are also available. So yeah. So yeah, join the community. That's it. So I see there's more questions in the chat. I don't know if Jeremy, if you want to open your microphone and ask a question.
Sure. So I just put it in the chat, but I'll read it out. So, you know, as you just said, there's lots of levers that are available to people to vote on, and you have these calls once a week. And my impression is that the people on the calls, you know, the experts, they sort of lay out, you know, a limited set of options, and then the token holders basically just follow along. And so the criticism of that, I guess, is it doesn't really sound that decentralized. So even though it's technically decentralized because anyone can vote anyway, you're really just sort of receiving the wisdom from kind of like the technocrats at the top. And so,
yes,
you know, is this really like a new paradigm, or is it just kind of like a central bank?
Yeah.
Sort of
So yeah, it really comes to how you organize a community in a decentralized way, because you need to coordinate. Because even if you're decentralized, I think you can still try to coordinate. And yeah, ultimately the call is the best way to coordinate. But yes, if you listen to these calls, I agree with your impression here. That might sound like just technocrats talking about numbers and graphs, and there's no real decision. But actually, the calls are designed in a way that there's no actual decisions that are made on these calls. They're more there for share information and try to collect community sentiment. But if you try to push for a specific decision on this call, the community moderators will tell you, well, if you have a proposal to make, go on the forum, post it in the forum, and debate there. And that's actually where they try to get the debate to happen. But yeah, and that's a challenge. The Maker protocol requires a lot of community involvement. And how can you do that in a decentralized way? Right now, the Maker Foundation has been organizing a lot of these things, but eventually it won't be there. We want other people to take over this part, and still up to, we're still trying to figure it out.
Yeah. And then sort of a follow-up, I guess, sort of picking up on Gabriel's comment too, like, should you even give, like, the MakerDAO, like the whole system is really complicated. Like I have trouble understanding all the different aspects of it, and I've looked at it for quite some time. And there's all sorts of different rates and things that are being set, and it's not really clear what the causal relationship is of setting them. And so is that like something that you should just have random people, you know, who hold the token vote on, or is it actually better in a more technocratic setting where you actually have experts that can lead the way?
Yeah, that there's a balance. Of course, you don't want to, you want people that make a decision, that are vote, to be informed, and that's why there's different ways to do that. But yeah, we're trying to get people to get involved first, get into the community, try to understand how it works, and then eventually, if you want, get some MKR and start voting. But yes, but I agree, it's a very complex system, and we're still trying to figure out how to efficiently run this protocol, because there's a lot of different parameters. We don't want to vote on every parameter every week. That will be too cumbersome. They will be unproductive. But yeah, it's a challenge. I agree.
You're trying out something new, so it's good.
Yeah. And of course, in the community, there's always discussions about how we can improve the process as well. And it's evolving. If you look at how community calls were a year ago or just a few months ago, you'll see it's changing. And there's now a formal process. It's called the Maker Improvement Process, MIP. Where we're trying to, it's a bit like EIP on Ethereum and other protocols. We're trying to formalize changes to the protocol and how we run things, and how we run everything from the protocol, but also the community itself.